We think FY23 would be the first year of policy normalization post-pandemic. Hence, we would expect it to be a tale of two halves. In the first half, while the market has digested the change in interest rate regime from a declining one to an increasing one, it will digest the impact of near-term geopolitics and transient upmove in commodities over the March and June quarter result season. Hence, I would expect it to be volatile. In the second half, I would expect markets to respond to earnings direction as the earnings recovery unfolds. Overall, we are constructive on equities over the next 12 to 15 months, but are prepared for higher volatility ahead. In the March quarter result season, we expect the earnings to be two-paced in nature. While commodity users are likely to face the impact of transient rise in commodity prices in its financials, the commodity earners are likely to report the benefits of the same. Furthermore, we expect the urban demand to be strong and rural demand to be weak, while we expect the June quarter outlook to be clouded by geopolitical crisis and the further impact on commodity prices. Over the medium term, we expect the economy-facing sectors like select financials, industrials, and indirect plays on real estate sector to do well. On the other hand, the sectors that are less favorites include consumer staples and utilities at the moment. We are constructive on mid and small cap stocks over the medium term. However, the valuation differential that existed between large and mid and small cap stocks has normalized over the last 12 to 18 months. Going forward, we believe the movements will likely be stock specific and will follow the earnings upgrade-downgrade cycle of the stocks closely. As a share class, they continue to be a strong source of wealth creation for investors with a 3 to 5 year investing time horizon, and hence deserves a meaningful part of investors' asset allocation. Amongst the themes that we are betting on for the next year are private consumption demand with pricing power, private sector investment demand, government growth scheme beneficiaries, and select financials based on the rebound in credit growth. Finally, the China Plus One beneficiaries. We think investors should pay close attention to their preferred asset allocation that is commensurate with the return objective. From CY22 perspective, we think they should focus on bottom-up themes rather than macro themes to generate returns. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.